Fantastic. George, Cathy, JP, it's great to be with you. Our topic today is winning the AI race. So I've been covering venture capital for several years, and we've seen a massive uptake in venture capital investments in AI the last couple of years. It'd be very easy to say that it was the growth of ChatGPT that maybe launched that. We have 400 million now active users on ChatGPT. But I interviewed Ben Gortzel last week, and he's been working on AI for 3 or 4 decades. So we're seeing a large uptake in VC capital in AI. And I wanted to just kind of ask you, first of all, what are some of the biggest use cases and business models you're seeing around startups in AI, and what gets you the most excited about the industry? Maybe we can begin here with JP and move our way down.
Yeah, so look, I think the first 2 years after everybody saw generative AI for the first time, because generative AI is just one subset of AI. There's machine learning, there's other types that people have been working on for a long time. But once people saw the power of it, I think the first wave, at least that we saw, and when we started investing, was the foundational models and then all the infrastructure needed to set up and work with generative AI, because only a few teams had been really at the forefront of it, not least of which is OpenAI and Anthropic, which is one of our investments. But those businesses first needed a lot of the infrastructure, because those are net new things. You didn't realize what you needed to build a Gen AI product. And then once that foundational layer of the foundation models and all the infrastructure got laid down, then you're starting to see all these applications now starting to come out leveraging a lot of those tools. But a lot of people had to build it themselves first. So I think that now there's a lot of hoopla around the AI applications that are really coming out of it. And very quickly, it's almost in a blink of, it's hard to believe it's been 2.5 years since ChatGPT came out and how much innovation has come out of the market. But I think now the next step is being taken with agents, and that's the thing that everybody's thinking about now.
Yeah. I'd love to ask the audience, how many people, raise your hand if you use ChatGPT at least once a week?
Pretty much everyone.
Right? It's crazy. I remember when ChatGPT launched, I think it's November of 23, right? They quickly, 22, excuse me, quickly got up to 100 million users in 2 months. Now I think we're at 800 million monthly active users. And the reason why this is important is with Gen AI, consumer behavior was the first to change, right? You saw that really rapid uptake in using ChatGPT. But what was really surprising was that enterprise adoption followed so quickly after. And I think all 3 of us here on the stage are primarily focused on B2B software, and that's been really, really exciting to see. Today, where we're sitting in 2025, I'm seeing small companies, startups, all the way to the Fortune 500. Everyone is using Gen AI up and down their stack. I'm seeing it used in marketing, in sales, in code gen, in customer support. It's quite frankly overwhelming. Now, I think the big question is how much of that is innovation budgets and how much of that will persist. But currently, some of the biggest areas I've seen, I think number 1 is most certainly code generation. So that's using AI to assist in writing code. I think the second biggest area that I'm personally seeing is probably around sales, using AI to generate leads, to outbound prospects, followed probably by customer support. And we're seeing a lot of really interesting vertical applications as well.
I think as we're thinking about the setup here in terms of where the next few years are headed, specifically when it comes to the applications, as Cathy had indicated, there has been a pretty good moment for the last 5 years or so in just getting the infrastructure correct. And I think we're at a moment where the infrastructure, particularly in the enterprise, has started to settle down. One of my first investments was a company called Weights and Biases. It turned out that the foundation model builders and anyone who was in the machine learning space had to use tools to do all the experiment tracking, parameter tuning, version controls to build models at scale. Turns out Weights and Biases became the de facto product to do that, and about 4 months ago was acquired by CoreWeave for close to $2 billion in equity value of CoreWeave as CoreWeave was going public. The reason I mentioned that was that we're starting to now see the platform sediment at this point, and we're starting to see that moment where you can build this next generation of enterprise applications. And as that's happening, as Cathy indicated, there is a tremendous wave that will continue to progress when it comes to the consumer consumption of AI systems at scale. And so both are happening at once as we speak. And I would just say the only caveat in terms of how I think about this on a go-forward basis is we have most of the infrastructure at this moment, particularly in the enterprise, to go build the next generation of enterprise applications.
Well, Cathy, I think you just touched upon it. It's a bit overwhelming, the amount of use cases we're seeing around AI. And when you're evaluating a startup, for example, what kind of metrics do you look at? How do you pick, which avenue to invest in, and how does a startup set itself apart from others when it comes to funding and getting to the next stage?
Yeah, that's a great question. I would say fundamentally, nothing has changed about what we look for in companies that we seek to back, right? The core principles are all the same. We're looking for, in our case, at our stage, a company that's found product market fit. It's solving a very specific pain point for customers that customers desperately need. Customers are willing to pay, hopefully, a lot of money for this product. And they have a go-to-market motion that is consistent and repeatable. Now, what has changed in this new wave of generative AI is that the rate of innovation has dramatically increased. And there's pluses to that, and there's cons to that. So the pluses to that is I've never seen in my career, and I've been investing for about a dozen years, companies grow as fast as the companies that we're looking at now. We're talking about companies that can grow sometimes from 0 to 40 in 1 year. We've never seen that, at least in my career. But on the flip side, there's so much competition, right? Gen AI makes it very easy to test things, to put things in production quickly, change them. And so what that means is, even though you are backing a company that is leading today, that doesn't mean that company will be leading in 1 year, 2 years, 3 years, right? And so we have had to become a lot more granular on looking at usage metrics, really looking closely at retention cohorts and understanding how these companies are able to build, we call them growth loops, right? Little incremental things in their product that capture users, that make the product more powerful over time and compound on each other. And lastly, and this is a classic thing that we've always looked for, it's a team. But what we're looking for is slightly different, right? This might be a little bit more of a spicy take, but I actually think the value of experience is depreciating a little bit more because playbooks are now very different. Before, there was a playbook on how to grow sales from 10 to 100 and how do you build customer success. All those playbooks have kind of gone out the window, and instead, the best founders I'm seeing have to create the playbook themselves, and they have to experiment and move very quickly.
Yeah, I'd say the only other time I've seen something like this was around mobile. And that era, I mean, we'd see so many companies, and everything looked like it was working. If you could fog a mirror, you could produce ARR. There's nothing like it now. Because mobile, you needed to pay $1,000+ for a device to get online, and smartphone adoption took a while. Now it's just open your browser, and you're touching Gen AI. So there's no restrictions in the same way as before, so it's even worse. There are more companies showing more and more traction, and so it's crowded. A lot of people can put together a really good demo before you can kind of tell who has a slick product or not by the demo. Now everything looks amazing. And so, yeah, team, like location in real estate, team. Super important. But I think the thing that, and everything Cathy said was spot on, and I'd say one thing that I've seen teams do that we don't appreciate as much or we don't gravitate to as much is to talk so much about the product and what it does versus the problem, the pain point, or what we really chase. I didn't think about this before, but we kind of try to find these perfect storms which form in markets that allow for all this demand to really explode in short periods of time, because venture is it's an abnormal business. Like you are doing unnatural things in constrained periods of time, and not many markets are like that, truly, right? Obviously, Gen AI, everybody wants to adopt it, but what's enduring, right? What's going to allow a business to get to $50, $100 million in revenue and keep growing 50 to 100%? That's very hard to find, and sometimes, these outcomes are dictated less by product and more by market. So markets have a bound of outcomes available to the companies operating in them, and you hope that you have a team that hits the top end of that range, whatever that is. But the markets, the companies that end up being so big, it's because these outcomes, the upside in that market starts growing exponentially as the market matures. And so we really are we're storm chasers in a way, right? What are those markets? And then you hope to find a team that hits the seam in that market, right? Weights and Biases was a great story. It was around before Gen AI, but then, once Gen AI hit, it just caught that wave. And so that upside potential for them really changed. And so that's really where I hope to get more founders pitching me their view of the market and view of what's going to win in that market and why it's a venture backable business in a venture market than just the product.
We should start calling each other storm chasers.
Yeah, maybe. There you go. If you want something, we can clip that.
There's a really fascinating thing I'm noticing now in the newest companies that we're starting to invest in, which is like that point that JP is making on the market has actually shifted quite dramatically. Because like up to this moment, where if you were an enterprise software investor, you'd really think about the software market itself and the total addressable market around software. But it turns out in AI, you're not only consuming the software market, but you're also potentially consuming the labor pool, the services, like everything that encompasses that market beyond just the software itself can be really encompassed by AI. And I'm actually starting to see the first manifestations of companies like that. So one of the investments that I made a few years back is a company called Relevance AI, and they build digital synthetic workers for front office work. So if you are a marketing content person or you are a sales BDR, SDR, you can now have a synthetic version of yourself on Relevance. And it provides a platform where you have digital coworkers that are working alongside of human coworkers. And the company is doing incredibly well in the enterprise, selling to some of the largest enterprise customers in the world, because it's met the moment of not only sort of rethinking what an SDR, BDR does in the software realm, but also just the labor function itself, the services capabilities surrounding what you would typically have hired an outsourced agency to do. They're now doing it themselves. And the company's like growing like a weed, right? It's gone from 0 to 5, 5 to 20 as we speak in the last year. And so these markets are being reimagined quite dramatically by AI, and we're seeing the first manifestations of that as well.
JP, you mentioned storm chasing. I want to know, what storms exactly are you chasing? Are there any particular industries or use cases that are perhaps underhyped in AI applications that you're really interested in? And I mean, I don't you have to give the whole thing, but I want to kind of get beyond.
It's hard to find something underhyped.
Yeah.
in AI. But well, I'll give you an example. So an investment we made, one of the latest one I made is in a vertical market that typically investors would run away from. Higher education. So you say, yeah, we get this, I don't know, higher education. Well, when you think of it, so think not the classroom, but the administrative side of universities. And thinking of the perfect storm, this is a vignette, so just bear with me, but demographic cliff, there was declining birth rates, so there's fewer people that are going to be going to college. That's less revenue for these institutions. The administrative spend went from 60 billion to 240 billion. There's more than one administrator per student in some of these universities, which is absolutely crazy. And then people are thinking, and that's why the tuitions go up, because these are nonprofit institutions. And so people are thinking, do I need to go to college anymore? What's the ROI? And so all those things create an existential threat to that market. And so combining what Relevance does in a world of AI agents for higher ed that attack the administrative spend, that's what's causing a lot of these problems. And so they can't survive if they don't automate and they don't take some of that administrative spend away. So that's the 240 billion is what you're really chasing, right? That's the addressable market for this company. And you've seen, I mean, you just can't imagine how short the sales cycles are and how large the deals are in an industry that previously would have been shunned and cast aside. All of a sudden it became really, really relevant. And there's a lot of news around higher ed lately, and that's even making it, a universal problem. So that's just an example of one market that would have otherwise been overlooked. So we have to rethink it all.
Sam, I was going to say another way we're seeing AI take up even more market share than one-to-one replacement of existing software spend is there are many use cases where previously it was just not economically feasible to do it right and do it properly, right? So a great example is many businesses have a support office that you can call in, but it's only staffed maybe from 9 until 5 p.m. It could be in residential real estate, like my company, Elise AI. It could be a doctor's office, a dentist's office, and they might have a lunch break between 12 to 1. So if you don't call within the hours that someone's there and available to pick up the phone, what happens to your call? It goes into the ether, and you'd be very lucky to get your call responded. The beauty with AI is they're not even replacing anyone. You can literally all of a sudden, in a usually multimodal way, so you can call, text, chat, you can get a response any time of the day, on the weekend, after hours, and I think that's really, really powerful, right? Because people tend to think about AI as making a one-to-one replacement of a job or an existing software spend, but it's actually expansive.
I think I covered.
Yeah, you covered.
Topic, yeah.
Well, to shift gears a little bit, JP and maybe George, we've seen it's hard to escape the trade war going on today and tariffs on GPUs and semiconductors. What threat do you think that plays in our ability, for example, to scale up AI infrastructure here? Because it's going to require a lot of data. Do you see any threats emanating from the current trade war regime that we're seeing and whether it's going to be persistent moving forward?
I would only comment that I think everyone would really appreciate a more stable environment to do business, and we're starting to see a lot of uncertainty, particularly as we go into the second half of this year. It's been fascinating to see in our own portfolio companies, there's very good understanding of what Q1, Q2 looks like, and then almost like no predictability in the second half of the year. And certainly that's also showing up in public companies now where forecasts and outlooks are being thrown out the window. So I think the thing I would just advocate for is a modicum of stability as we think through this. Whether tariffs and the approach that we're taking is the right one or wrong one, it really doesn't matter. I think what the market is looking for is more stability. I think as we look at some of the more interesting companies, public and or private, in the AI space, they are in the build mode as we speak, right? And so you look at a public concern like NVIDIA, which is going to announce pretty shortly, as well as things that are in the ecosystem like CoreWeave. These are companies that are massively scaling up as we speak, and for them to pull that off, you need a consistent business environment to do that in. So I think that's the thing I'd advocate for more than anything else.
The only thing I'd add, spot on, and I'd say the same thing happened with fiber and the internet. And everybody thought there'll be decades of fiber being laid down, and it continued, but certainly not at the pace at which it was originally. And it's because the system was overloaded with demand. And certainly it's obvious that the GPU clusters are overloaded with demand, and capacity is a very real thing. I can tell you for a lot of the foundation model companies, as soon as it lights up, it's immediately consumed. And so they're really, even at their current growth rates, are constrained by capacity. And then we'll be constrained by electricity and other things. But I always say necessity is the mother of invention. And so there'll always be something that'll happen, some innovation on the margin that's going to take whatever's been done and maybe allow you to get more leverage from it. And so maybe that's an area to think through. It happened with fiber in the late 90s. There were devices that were put into the cables to expand their use case and kind of transmit 5x the amount of data. So I think something will happen that way, because the demand here, I think, is even more than the planned expansions that we see from a lot of the big players.
Let me give a pretty compelling example of exactly what JP just pointed out. Even as a model like DeepSeek emerged, right, and when it emerged, you had a very distilled model that could use less resources in terms of being able to provide the inference at scale in comparison to the other state-of-the-art models at that moment. It turns out that the moment DeepSeek started to, and by the way, all the domain-specific models that have subsequently emerged, the demand surface actually increased at that moment. It didn't go down. In fact, all of that additional capacity that was available because the model was more efficient, Jevons paradox really set in and started to show that all of that demand was effectively immediately soaked up. And the prices of neoclouds and inference literally on a spot basis went up during the first few weeks as DeepSeek emerged. And so that is a very stark example of just saying there's enough capacity, not only to be able to, serve this market, but also call it the emerging, scale of what we need. And as the models become more efficient and more capacity comes online, as long as we have a more stable environment to do this in, this is only going up and to the right for the near term. And so that's what I'm really bullish about. The bear case is, of course, that there's a lot of instability in the market, and you got to almost kind of price that in as you think about your
But the demand will always be there.
But the demand is absolutely going to be there.
Well, that's interesting because it kind of dovetails into my next question. It's a bit tongue-in-cheek, but there's a lot of comparisons between AI today and the dot-com bubble. Is AI in a bubble today? I mean, we saw $73 billion worth of VC funding into AI in the first quarter. Valuations are very high. I just want to get your insights. Is it a bubble, or is there a lot more room to grow for companies that can actually scale efficiently?
I mean, when we look at it in the short term, there's definitely valuations going a little crazy, and you certainly see that in deals that we're working on. And I think as Cathy and I were coming on the stage, we were just talking about, like, okay, any deal you might be looking at, there's literally 5 other people looking at it at the same time, right, minimum, and that's par for the course. So clearly there is a near-term bubble that's here, and it's probably not going to go anywhere, and it reflects the fact that there is probably a better alpha opportunity and therefore a crazier beta in the AI market than any other part of the software market as we speak. At some point, as we look about this in the medium and long term, I think we'll actually realize that this will start to equilibrate, and that valuations on the near term, as hyped up as they might be, they will start to come down to reasonableness in whatever form that reasonableness is. And we'll start to see many companies that you might have thought were expensive when you put the money in will turn out to either be dead or be a great investment. So there's a bit of a binary moment there as well. I just remember even when we did weights and biases, there was like 3 other competitors in that space. We obliterated every single one of them, right? And just so it turned out that became the winner in that market. I think we're going to see a lot more of those moments where if you've happened to pick the right one, particularly in the early moments of investing as a VC, you're going to be fine.
I would agree with that. I mean, I'm an AI optimist. I think no one really knows how much value these AI companies will truly create. And a big part of it is the ability to eat into the services budget and other expansionary areas around core software spend. But yeah, I agree with George. It certainly feels hot right now. I think this is the hardest part of our jobs, is picking the right company. And it's probably the most exciting time to be in venture ever, certainly, at least for me, but also the hardest, right? There's so many companies out there. It's so competitive. But if you kind of pick the right one, and a lot of it boils down to the team, I fundamentally believe that, you're going to be all right.
Yeah, the only thing I'd add is I think assets are in a bubble, but the market is not. I think we're even underestimating how the top end of the outcomes that are available in this market. But any individual company is going to naturally be overvalued because so many of us chasing them. But we're going to be surprised on the upside, I think.
That's a fantastic way to end it. It's all the time we have. Thank you, everyone.
Thank you.
Thank you.